Do you think they're real? Because there's this talks of AI bubble.
Yeah, I think we are, you got to think about different types of bubbles, right? I've got a book coming out at the end of the year. It's called The Brief History of Financial Bubbles. And I'll talk about 10 different bubbles over the course of history, going back to Amsterdam in 1636 and tulips, and then ending with AI and what's going on today. There are some bubbles like the tulip bubble where the prices went way up and then they came way down. And they did that over the space of about a year and a half. And you look back and you realize, well, there wasn't a lot of economic value created there. So that really was a creation and a destruction of wealth. And there's some other bubbles that are like that. Like there are land bubbles in Australia in 1886. I think 2008, 2009 in the US and UK and Ireland and Spain was another very destructive real estate bubble. Not a lot of value created. Real estate prices went up, came back down again. It was born because of interest rates being too low and some financial engineering that didn't create any value. There are tech bubbles that do create value. So the biggest ones are in the UK in 1845, and then primarily in the US in 1998, 99, the dot-com bubble. And I think the AI, it feels like a little bit like that dot-com bubble period where there were a lot of great companies created, right? We had NVIDIA, we had Amazon, we had PayPal where I worked, eBay and Yahoo, Salesforce. Coming out of that bubble that did implode, and there were a lot of losers, but there were a lot of winners in that space as well. And with the profits from the winners, other companies were created. So when I was at PayPal, the two founders were Peter Thiel and Elon Musk. Peter Thiel took his money from PayPal, and his first big check, he was the first big investor in Facebook. Elon Musk took his profits and made SpaceX and Tesla and the Boring Company, and then, and bought X.com, right? And so, or Twitter. And so there's a lot of value created out of that bubble, but there was a lot of losers as well. I think AI feels like it's going to be a lot of winners, and a lot of these companies that don't have good fundamental business models are going to be losers. Now that said, at the dot-com bubble, the price-earnings ratio of the market was 70 times earnings, or north of that. The Mag 7 today is 27, 28, 29 times earnings. So it's expensive, but not quite the stuff that bubbles are made of. So we like AI. We think it's a transformative technology that will be, on the order of mobile and the internet. Those are the only two other innovations I can think of in my lifetime that were as impactful. So we like AI. We do have some AI bets. I'm just very concerned that there are going to be a lot of losers and a lot of companies spending a lot of money they don't have. It's a capex intensive business. In order to finance the capex, they have to raise money at higher and higher valuations. That's not a good recipe. And so when we see those types of business plans, we try to stay clear.
You mentioned the investment in the infrastructure. So when we are getting the $20 chat GDP or other products a month, how much power does that take? How much is the cost of that for these AI companies?
Yeah, it does. When you go to Google and search for something, that search happens in about, 0.1 or 0.2 seconds. And you will get back an answer and maybe a handful of links as to where to go. When you do a search on like Google Gemini, it's running probably 50 to 100 searches and then synthesizing all that information and then giving you the answer. And so it's really 50 to 100 times more intensive, even though it only takes a couple of seconds. It does take 50 to 100 times more power, more energy, more compute power than what Google traditional search does. And so a company like OpenAI, which runs ChatGPT, they'll be at a run rate for $20 billion in revenue by the end of the year, but their costs are probably 3 or 4 times that. So they're burning $20, $40, $60 billion a year in capital spend right now just to power the searches that they're doing. So I guess the short answer is no, $20 a month, and as a subscription fee, it probably won't cover all those costs. A lot of that is capital intensive, so they're building data centers, which will then enable them to run the compute power. So that's a one-time investment that'll pay off over many years.
So it's not the operating power cost.
It's not the operating power cost, although that's a big piece of it. But the majority of it now is capex to build out the data centers and to be able to then scale later. I do think I would imagine that the cost of power is going to be a significant constraint on AI development right now is energy and where you're going to get it from. Some of the deals we've seen from OpenAI and Oracle, for instance, they announced a $500 billion deal with between OpenAI and Oracle, and they want to use that to build data centers. Very few of them in California. None of them in California actually. They're all going to be in Texas and Phoenix for cost and regulatory reasons. But they don't have the money to raise right now, so to spend that money. So they're going to have to go raise the money and finance it. And the energy cost associated with that deal alone is like 2 Hoover dams or 4 nuclear power plants. I mean, it is a lot of power that it's going to be, that'll be a demand on the grid for years to come. So it is, I think, incumbent on the U.S. as a federal matter to be able to provide that energy in order to keep up. But the payoffs are tremendous if you can do it.
You mentioned that you are involved with a number of SaaS technology type companies, like I guess we can call them traditional technology software companies.
Yeah.
You mentioned that they are not getting a lot of traction in the markets, in the financial markets.
Right.
Where do you think that space is headed?
Yeah, I don't know. If you were a SaaS company, 5 years ago and you were growing at 25, 30% a year, even if you weren't making money, you could raise money in an IPO and be trading at 10, 12 times revenues. Now those multiples are down to 6 or 7, and there's more of an impetus on being profitable or at least breaking even. So it's become a lot more challenging to be a SaaS company. I think all these companies are going to have to make a determination as to whether AI helps them or hurts them. There's a lot of fear in traditional SaaS that AI is going to be disruptive.
It's going to take their place. Is that the fear?
Yeah. If you're a vertical SaaS company and you're selling into, think of let's take an example like a call center software company, someone like, Zendesk, who for a long time had a good run in the public markets and was a very valuable company. But they operate call centers. These are individuals who are answering phone calls and things like, hey, where's my package?
So they're
I have a
entering the
problem with my
tickets,
television.
using the software, yeah.
Well, now, if you can speak to not a person, but an AI chatbot, right? Maybe an AI company comes along and displaces the whole call center software industry. If you're a company like Five9, which is in the public market, or Zendesk, which was in the public market and got taken private, you might be thinking, wow, my business just got very severely challenged almost overnight from AI, which has just disrupted my industry. And it's not just, call center software. Like if you're running a law firm, I got to think every law firm is thinking, if AI can do contracts and figure out legal agreements around non-disclosure agreements or rental agreements and do it for half the cost and half the time as a paralegal or an associate, that's a disruptive technology. So a lot of SaaS companies, I think, are going to be in a place where that AI can really disrupt what they do and take away their business. On the flip side, they can use AI to enhance their capabilities. Like one of our investments is in Canva, which is a software company that does online collaboration and builds presentations. And they've built and acquired an AI company and built it into their functionality where you can use that to design presentations and make them a lot more beautiful and a lot more usable, a lot more functional. Some software companies that are SaaS companies that are doing Excel spreadsheets or financial planning and tools can now use AI to help you build your Excel models faster or your financial planning tools faster, do budget scenarios better. And so it can become a positive or a negative. And I think there'll be winners and losers. And I think for that space in general, the winners will unlock vast new markets and become a lot more valuable. The losers will have to focus on getting profitable, and maybe if they can be public, or if they can't be public at whatever valuation, then some private equity company will come in and buy them out and then redo the cost structure and figure out how to bundle up a bunch of these companies and package them up and just make them a lot more efficient. But that's typically what happens to legacy technology companies.
Aman, based on what you're seeing out there, where would you invest?
I can tell you where the areas that we like. So I described the market before as being a lot of haves and have-nots, a lot of very hot, hyped AI companies, especially even at the seed level, they're getting valuations that are very high, and I think unsustainably high. I think that feels like a bit of a bubble where there'll be a valuation reset.
Do they have competition?
Yeah, we have a lot of competition. Everybody wants to invest in AI. Everybody I know wants to find a way to get into OpenAI or Anthropic or chase some of these very high-profile companies. They're very good companies, but they're very expensive. We as investors, we're not going to get a deal getting into a company like that if you're not already in it. If you're in it already, great. If you're trying to get in now, I think it's very late to get in. But there are a lot of AI-enabled companies that are off that beaten path. They're not one of the top 10 well-known names, but they're like one level down. But they're making hundreds of millions in revenue. They see the opportunities that AI can create. They can become profitable using the efficiencies that AI can generate. And because they're off the beaten path, they're not getting overbid by all the competition. So there are lots of opportunities in that second category that we like. And then our firm focuses on secondary investments, which means that we buy out existing investors from companies that we like. So rather than going and buying from, let's take an example like Canva. They're not a public company, but they want to give liquidity back to their shareholders and employees. every 6 months or every year. And if they were on the public market today, I think they'd be much more valuable than they are right now. But by being in the private market and buying in their secondary offers and buying out their early employees, we think we can get a discount to what that company is worth in the long run. So we have our niche of, where we like to focus on, and it tends to be these well-known but not the elite 8 or the top 10 private companies that everyone's chasing. It's usually one step down and usually through a secondary
Can you
angle.
explain those? Like what are the sectors that you think will benefit from this boom?
Yeah, I think the ones that I think are seeing a lot of growth, we know that fintech is going through a lot of transformation, a huge renaissance. There are a lot of companies that are very successful. They're doing everything from payments to online lending. They can use AI to come up with smarter credit scores, for instance, underwrite small business loans better and faster. There's a whole wave towards stablecoins and stablecoin issuers that I think is going to be another profitable area. Web 3.0, decentralized finance, companies using blockchain to create tokens and businesses, I think is also very valuable. So those are some of the spaces that we've been looking at. We do like SaaS companies. We think there are a lot of high growth SaaS companies where AI is a capability and they're using it to accelerate their growth and their profitability. That's another area. Our biggest company right now is SpaceX. That's probably our number one position in our second fund. Anduril is probably one of our big positions in our third fund. So those are aerospace and defense technology. So we have a pretty broad remit as to what we like, but we're looking for companies where the growth dynamic is really, really good. They're going after a big industry that's disruptive. They've got founders and management teams that we really love, and a technology we can understand that we think will be disruptive and give them a defensible moat in the future.
You mentioned that these software companies are worried, and especially these SaaS companies, worried that they're going to get replaced completely by AI.
Yeah.
How likely is that?
Yeah, it depends on the industry. I think inevitably every industry will be reshaped and disrupted by AI. It's just a matter of time. The obvious first ones are, call centers where you've got a lot of people doing repetitive tasks off of a script, and AI can do that very well. It turns out that autonomous driving works pretty well. Those cars seem to be safer than humans in terms of their accident rates. So if you're driving Uber or DoorDash, or if you're I guess even an automobile company, like that is all going to get disrupted and changed by AI over the next 3, 5, 7 years, maybe even faster in some of those cases. Law firms, for instance, we know that AI is able to provide contracts and create documents that now takes lawyers a lot of time and a lot of money to do, and AI can do that faster. So some of those are very obvious, but I think almost every industry will become disrupted and challenged by AI. So it's every company's got to think about, when is AI coming for me? How am I going to use it as a capability enhancer, something that will improve my business? And how do I defend against the encroachment on my business?